The time has come for policy to adjust, said Federal Reserve Board Chair Jerome Powell. And with those 8 words, Powell set off a feeding frenzy in risk assets. Bitcoin surged to more than $64,000, a sharp turnaround from the lows around $54,000 earlier in the month. BTC now stands around $61,600, though the groundwork has been laid for a rally to $100,000. While Powell did not provide timing for rate cuts, he noted that the direction of travel is clear, saying that the timing and pace of the cuts will come down entirely to the data and how they perceive it. The Fed has effectively won its battle with inflation, and now it must turn to the other side of its dual mandate, the labor market. Inflation has declined significantly. The labor market is no longer overheated, and conditions are now less tight than those that prevailed before the pandemic, Powell said. Supply constraints have normalized, and the balance of the risks to our two mandates has changed. Now, with Nvidia set to report earnings Wednesday, in a report that could send shockwaves throughout tech and the closely correlated crypto industry, most analysts, including Wedbush's Dan Ives, expect the company to report a blowout quarter. If that happens, and we fully expect it will, then it's off to the races for tech stocks and altcoins. While Bitcoin has long been touted as digital gold, it is more closely correlated with modern oil and gold companies, of which AI stocks have picked up the mantle, than with the commodity itself. With the market for tech resembling the mid-1990s rather than the 1999 tech bubble, we think that tech and crypto will soon stage a furious rally on the heels of Nvidia's blowout quarter. There is one component, however, a volatile and unpredictable catalyst, that remains without firm footing until November, the U.S. presidential election. Both Vice President Kamala Harris and former President Donald Trump have been appealing to the cryptocurrency bloc of voters of late. But Trump has embraced Bitcoin in a more clearly stated manner, while Harris still has yet to clarify her policies surrounding crypto. That means voters are currently inclined to believe a Trump return to the White House could be more favorable for positive crypto regulation. And this group of crypto-minded voters has grown significantly in the past year. Since 2023, we've seen a 95% increase in the amount of crypto millionaires and strong inflows into Bitcoin exchange-traded funds, or ETFs. Worldwide, there are nearly 200,000 individuals with more than $1 million in crypto assets, up from 88,200 last year. What's more, there are now 325 people with over 100 million in crypto, and 28 with over $1 billion. These individuals could provide some much-needed firepower to each candidate, depending on which is more likely to pass favorable crypto legislation. Over the long term, such whales are also highly influential as to the price of crypto, and they're only growing in number. The rapid growth of crypto ETFs has also unleashed institutional investors in the crypto space, and increased acceptance among big asset managers could contribute to even more wealth creation going forward. These newly minted millionaires and billionaires are seeking to build their empires in more tax and crypto-friendly locales, which is why Henley and Partners created the Crypto Adoption Index, an index that ranks countries by how they regulate and tax cryptocurrencies. First on the list, it's not the United States, it's Singapore, followed by Hong Kong, the United Arab Emirates, and then the US. The results of the US. The presidential election could potentially impact cryptocurrency adoption and regulation in the United States. As such, keep an eye on how each presidential candidate addresses the following regulations. Emphasis on investor safeguards could influence market stability and credibility. Tax policies. Changes in tax policies for cryptocurrency holdings and transactions could influence the attractiveness of the United States as a destination for crypto-wealthy individuals. Infrastructure development. The elected administration's support for, or opposition to, crypto-related infrastructure such as crypto ATMs and blockchain technology could impact the United States' crypto-friendliness. Now, before I get into the numerous fundamental and technical catalysts ahead, let's take a look at how our portfolio has been faring over the past week. Request, RECUSD. Over the past week, Request, RECUSD has continued to show mixed signals, but with a slight lean towards bearish sentiment. The Relative Strength Index, or RSI, has increased marginally to 48.80, inching closer to the neutral 50 level. This suggests that selling pressure has eased somewhat, but the token hasn't yet entered bullish territory. The conflicting signals we observed last week persist. While some moving averages like the EMA 10 and SMA 10 are signaling buy, longer-term averages are still suggesting sell. This divergence indicates uncertainty in the market. The MACD remains negative, and the Awesome Oscillator has turned slightly negative at minus 0.0191, hinting at potential downward momentum. However, the momentum indicator is giving a buy signal, which could suggest some underlying strength. Interestingly, The stochastic RSI has risen to 41.52 from last week's oversold condition. This move out of oversold territory might indicate that the anticipated bounce has occurred, albeit modestly. REIC USD's market cap has continued to grow, reaching $82.87 million. However, the trading volume has decreased to $1.31 million, now only about 1.9% of its market cap. This reduced volume could suggest waning interest or a period of consolidation. In summary, while REIC USD has shown some resilience, the overall picture remains cautious. The token seems to be in a period of indecision, with conflicting signals across various timeframes. We'll keep a close eye on volume and key resistance levels for signs of a more definitive trend emerging. Action to take. No action needed. Keep holding. Return plus 7.68% over the past 7 days. Hedera, HBAR USD. Hedera, HBAR USD, has continued to face headwinds this past week, with its price struggling to gain momentum. Despite the small price uptick, the technical indicators now paint a slightly more bearish picture compared to last week. The RSI has dipped further to 36.62, inching closer to oversold territory but not quite there yet. This suggests that there might be potential for a bounce if this trend continues. Interestingly, most oscillators are now showing neutral signals, indicating a lack of clear direction. The momentum indicator is giving a buy signal, which could be a glimmer of hope for bulls, but it's isolated among mostly neutral readings. The moving averages continue to tell a bearish story, with all major EMAs and SMAs still pointing towards selling pressure. This reinforces the notion that HBR is trading below its recent average prices across various time frames. Trading volume has increased slightly to $40.60 million over the past 24 hours, up from last week's $35.51 million. However, this is still relatively low compared to its market cap of $1.95 billion, suggesting that major players might be sitting on the sidelines. In summary, HBAR's technical picture has deteriorated slightly since last week. While there are some potential signs of overselling, the overall trend remains bearish in the short term. Investors should remain cautious and keep an eye out for any signs of a trend reversal before making significant moves. Action to take. No action needed. Keep holding. Return plus 2.18% over the past 7 days. LivePeer, LPT USD. Over the past week, LivePeer has shown some signs of stabilization, but the overall technical picture remains mixed. Let's break it down in simple terms. We're now looking at 49.16 for the RSI, which is pretty much neutral. This suggests that the selling pressure we saw last week has eased up a bit, but we're not seeing strong buying momentum either. Some of the oscillators are giving us conflicting signals. The momentum indicator is saying buy, while the MACD is saying sell. It's like the market is having a bit of an identity crisis. Looking at the moving averages, we're seeing a similar split personality. Shorter-term averages, like the 10-day simple moving average, are saying buy, while most of the longer-term averages are still saying sell. This could mean that while there's been some short-term improvement, the longer-term trend is still bearish. One positive sign is that the trading volume has increased. Last week, the 24-hour trading volume was about $14.63 million, but now it's up to $22.14 million. This shows that there's more activity in the market, which could potentially lead to price movements. The market cap has also increased slightly from $377 million to $484.31 million. This suggests that despite the mixed signals, there's been some positive price action over the past week. In simple terms, it looks like LivePeer is trying to find its footing. The extreme bearishness we saw last week has eased up a bit, but we're not seeing a clear bullish trend either. It's like the market is taking a breather and trying to decide which way to go next. For less experienced investors, this kind of market can be tricky. It might be tempting to jump in thinking the worst is over, but remember that mixed signals like these can sometimes lead to more volatility. Action to take. No action needed. Keep holding. Return. Plus 27.29% over the past 7 days. TrueFi, TrueUSD. Over the past week, TrueFi has shown some interesting developments, though the overall picture remains mixed. The RSI has slightly increased to 46.46, suggesting a minor improvement in momentum, but still indicating a neutral stance. The stochastic %K has dipped into oversold territory at 16.67, which could potentially signal a buying opportunity if a reversal occurs. The awesome oscillator remains in negative territory at minus 0.0135, reinforcing the bearish sentiment we saw developing last week. However, the momentum indicator is now showing a buy signal, hinting at a possible shift in market dynamics. Moving averages continue to paint a predominantly bearish picture, with most indicators signaling sell. Interestingly, the longer-term simple moving averages, 50 and 100, are still showing buy signals, maintaining the potential for long-term recovery we noted previously. Trading volume has decreased slightly to $13.54 million over the past 24 hours, down from last week's surge. This could indicate a cooling of market activity or a period of consolidation. TrueFi's market cap has seen a modest increase to $110.19 million, up from $103.49 million last week. This slight growth is a positive sign, though it's important to note that the crypto market can be highly volatile. TrueFi continues to face challenges, but there are some subtle signs of potential improvement here. Action to take. No action needed. Keep holding. Return plus 6.55% over the past 7 days. Stacks, STX USD. Stacks is showing some signs of improvement this past week, though the overall picture remains mixed. Looking at the RSI, it has climbed to 49.26, inching closer to the neutral 50 mark. This suggests that STX is gradually regaining some strength, though it hasn't quite entered bullish territory yet. The MACD indicator is still showing a sell signal, but the gap has continued to narrow. This could indicate that the bearish momentum is further weakening, potentially setting the stage for a trend reversal if positive momentum builds. Interestingly, we're seeing a split in the moving averages. Shorter-term EMAs and SMAs 10-day are now giving buy signals, while medium-term averages 20 to 30-day still suggest selling. Longer-term averages 50 to 100-day are back to giving buy signals. This mixed picture might indicate a transition period, with short-term sentiment improving while some medium-term caution remains. The stochastic %K has risen to 43.08, moving away from oversold territory. This supports the idea that selling pressure has eased and buyers are becoming more active. The ultimate oscillator has slightly increased to 50.83, remaining in neutral territory but with a slight bullish tilt. This continues to indicate a balance between buying and selling pressure across multiple time frames. STX's market cap has seen a notable increase to $2.66 billion, up from $2.23 billion last week. Trading volume has also risen to $80.18 million over the past 24 hours. The volume-to-market cap ratio has decreased slightly to 0.0246, which might suggest that the price increase has outpaced the growth in trading activity. In summary, STX seems to be showing early signs of recovery. The improving RSI, narrowing MACD gap, and bullish signals from short-term and long-term moving averages paint a more optimistic picture than last week. However, mixed signals from medium-term indicators suggest that caution is still warranted. The increased market cap and trading volume are encouraging signs, but investors should remain vigilant as the crypto market can be highly volatile. Action to take. No action needed. Keep holding. Return plus 19.31% over the past 7 days. BONK USD. In the week following our last analysis, BONK has shown some interesting shifts in its technical indicators. Its RSI has slightly increased to 46.11, still in neutral territory but moving away from oversold conditions. The stochastic %K has risen to 13.51, moving out of extremely oversold territory but still giving a buy signal. This, combined with the Williams % range at minus 86.14, indicates that BONK might be starting to recover from its recent lows. The Commodity Channel Index, or CCI, has moved to minus 81.77, now in neutral territory. This shift from the previous buy signal suggests a loss of momentum in the potential trend reversal we observed last week. Moving averages continue to paint a bearish picture, with all available EMAs and SMAs suggesting sell. This indicates that BONK's price is still below its recent average levels, despite the slight improvements in other indicators. Interestingly, the Hull moving average has maintained its buy signal at 0.00001733, potentially hinting at a short-term bullish movement. However, this is at odds with the overall bearish sentiment from other moving averages. Trading volume has decreased to $120.68 million from last week's $152.72 million, indicating a slight cooling off in market interest. However, the volume-to-market cap ratio remains relatively high at 0.0927, suggesting that BONK is still actively traded. Overall, the slight improvements in some oscillators are encouraging, but the persistent bearish signals from moving averages suggest that BONK isn't out of the woods yet. Investors should watch for further confirmation of a potential trend reversal before making any significant moves. Action to take. No action needed. Keep holding. Return plus 7.16% over the past 7 days.